Hey folks, hope you are doing fine. Welcome to our daily analysis for Nvidia stock. So based on today's research, I have prepared some important analysis to share with you regarding this company. Here are some questions I'm going to answer. What moved the stock today and why did the bounce feel half convincing? Is insider selling a red flag or noise? Are the technicals screaming more upside or whispering fade the rally? How does the crypto and macro angst affect the AI trade? And most importantly, is $Nvidia a buy here or is the air getting thin? Let me start with the headline facts up front so we can build the tape into a thesis. As of December 24, 2025, Nvidia is trading around $188.71, up roughly 2.8% on the day after rebounding from last week's low near $178 and testing resistance in the $190-$195 band. That intraday move was real, but it came with important caveats. We'll get there. From what I have been analyzing, this is not a simple, buy the dip, tape. It's a story written in price action, insider flows, technicals, and macro crosswinds, crypto fear plus AI mania. I don't think we are going to get a clean straight line breakout today. That doesn't mean that we can't see a massive leg up soon, but for anyone thinking about piling in without a plan, now is the time to slow down and parse the evidence. Now, let me address the question everyone has: is this rally real, or is it a squeeze on thin volume? I want to be very clear, the answer matters for how you position. Price action and the tape, what actually happened today? Short version, Nvidia popped 2.8% to roughly $188.71, reclaiming short-term ground after a dip into the $175-$178 support zone. The move put the stock testing resistance near $190-$195. That resistance range has been meaningful over the last few sessions. The headline bounce looked encouraging, but volume was lighter than average, which tells us the move was more technical positioning, short covering, retail re-entry, than a heavyweight institutional bid. I know, you want a clean breakout above $200. Hear me out, until we see a decisive move above $195-$200 with volume expansion, calling a resumption of the next leg would be premature. Many algos and discretionary desks treat $200 as the psychological accelerator, break it with conviction and the next target becomes the prior all-time highs and beyond. But the market needs a reason to give it that acceleration, and the tape today gave us only the hint, not the confirmation. Insider selling, is a $40 million director's sale a warning or noise? Here's the cold, uncomfortable fact: insider selling is happening. A company director recently sold roughly $40 million of Nvidia shares in mid-December, per filings and multiple news outlets. That's big money on the tape, and retail naturally hears director sold $40 million and assumes the worst. But context matters. Long-serving directors sometimes monetize long-held positions for estate planning, diversification, or tax reasons, and many retain large residual stakes even after the sale. For example, Reuters reported a large sale by a long-tenured director that still left him holding significant shares. That's the nuance most headlines skip. By the way, if you are finding this content resourceful so far and want more like this, like the video, it means a lot to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. From what I have been analyzing, insider sales should be a signal, not a death sentence. Watch whether selling accelerates or is a one-off. If we see a pattern of coordinated, repeated executive/director liquidation into rallies, that's a caution. If it's isolated and the director still owns a large stake, it's usually noise. Right now it's a meaningful data point, add it to the list, but don't let it be the only reason you bail on a thesis. Technical summary, practical, trade-ready long-term trend, Nvidia remains in a clear long-term uptrend, trading well above the 200-day moving average, which most data feeds place in the mid-$150-$170 range, sources vary. That's the baseline, longer-term trend equals bullish. Shorter term, the stock is regaining footing around the 50-day moving average, mid to high $170s to low $180s depending on feed, which has acted as dynamic support over the past weeks. That's why buyers have stepped in at $175, $178 repeatedly. Momentum, The RSI is back above 50 and shows momentum leaning neutral to bullish, and some feeds show an early MACD bullish crossover forming, helpful, but not yet a slam dunk. That cross would be more actionable if accompanied by rising volume. Key levels: support, $175, $178, short term, watch pivot $170, resistance cluster, $190, $195, then psychological $200 which would confirm a higher leg. Break above $200 with expanding volume equals technical confirmation to target prior highs. I know what you are thinking, technicals change fast. That's correct. These are live levels. If you trade this name, set alerts, not blind faith. From what I have been analyzing, the short-term buyers are active between $175, $178, we've seen bounces there multiple times, and failing that zone would increase the odds of a deeper retest of longer-term trend lines. Volume is the tell. The recent short-term bounce occurred on lighter than average volume, which points to a technical bounce rather than a new flood of institutional buying. When winners are being accumulated by institutions, you generally see volume expansion confirming the price move. When price rises on light volume, it often means short covering, retail FOMO, or small lot algo rotations. That's exactly what we saw today. So, momentum indicators are edging bullish, but without volume, the signal is suspect. A true breakout needs both price and volume. If you're trading, treat the current move as tentative until proven otherwise. Here's where the macro link matters. The broader crypto market cap sits around the low $3 trillion range, roughly $3.02, 3.05 T, and sentiment gauges are flashing extreme fear on the fear and greed meter. Bitcoin is trading in the mid to high $80,000 range, and the crypto risk-off tone has bled into growth tech sentiment more broadly. That risk aversion compresses liquidity and makes breakouts harder to sustain. That said, Nvidia appears to be defying some of the gloom. The stock is up roughly 35% year-to-date, outpacing many large-cap peers. Investors are treating Nvidia as the hardware backbone of the AI boom, a structural narrative that can partially decouple it from short-term crypto panic. But decoupling has limits. If risk-off becomes broader, rates or macro shocks, even industry leaders get pulled. I want to be very clear, crypto fear is not the sole driver here, but when the market overall is risk-averse, it tightens the path for risk assets to rally without clear fundamental news. Around December 20, 2025, Nvidia announced a major partnership with a leading AI research and infrastructure ecosystem. Company press releases/coverage show several high-profile tie-ups and government/industry collaborations in late deck, adding to a wave of strategic deals and MOUs that strengthen Nvidia's presence across research, government labs, and enterprise AI deployments. These partnerships are both symbolic, leadership claim, and practical, deploy systems, secure demand. Why does that matter? Because analysts and the market are valuing Nvidia not just on GPUs shipped today, but on AI platform and infrastructure, which includes partnerships, data center commitments, and long-term multi-year buy cycles. Some industry studies and research groups project big numbers for AI infrastructure spending. Estimates vary. Earlier research put a $190 figure for certain slices of AI markets in prior reports, which underpins the narrative that the AI TAM is enormous and growing. Use those estimates carefully. The exact figure changes by report, but the directional takeaway is the same: AI capex is large and accelerating. From what I have been analyzing, these partnership announcements are important for long lead demand visibility, but don't expect the stock to automatically catapult without execution updates, signed orders, confirmed deployment timelines, and visible capacity commitments. Nvidia is the market's AI poster child and has delivered strong returns this year, plus 35% YTD. That outperformance leads to heightened expectations. Growth must keep pace with sentiment. Many analysts still rate Nvidia highly, and several raised price targets on the thesis of rising AI capex. At the same time, the stock's valuation is sensitive. Any hint of slower upgrade cycles, margin pressure, or regulatory/supply disruptions can quickly compress multiples. I know what you are thinking: valuation be damned, the tech wins. Hear me out, being long the right structural story is different from being long at any price. If you're a long-term investor, the AI structural case can justify paying a premium, but that premium needs earnings growth to back it. If you're a trader, sensitivity to short-term multiple compression is a real risk. Nvidia's dominant position in AI accelerators is real and is poised to hit it to $1,775 soon, but it's not unassailable. Competition, export controls, and geopolitics are wildcards. Competition, rivals and adjacents, custom accelerators, hyperscaler-designed chips, consortium silicon, or future Moore's leaps, can reduce Nvidia's pricing power on certain workloads. Regulation and geopolitics, export approvals, cross-border licensing and supply chain restrictions could change revenue pathways for large deployments, particularly to certain cloud customers and governments. The market digests these risks unevenly, sometimes quickly. From what I have been analyzing, Nvidia's moat is deep, software plus hardware plus ecosystem, but the next 12 months are a test of execution, delivering systems at scale, showing economics work for hyperscalers, and navigating geopolitical friction. Scenarios, playbook for 3 realistic outcomes. I always like scenario frameworks because they force clarity. Below are 3 plausible 12 to 18-month outcomes and the market responses each would likely trigger. Bull, 30% probability Nvidia breaks above $200 with volume on the back of confirmed multi-year infrastructure deals and visible deployment timelines from cloud firms and research labs. Earnings and guidance accelerate, multiple expands, Nvidia leads the next leg higher. Catalyst, signed deals, public deployment timelines, capacity build-out announcements. Base, 45% probability Nvidia grinds higher but with volatility. The company shows strong data center growth but margins ebb and flow as inventory and pricing debates play out. Technicals oscillate between $170 support and $200 resistance until a clearer macro path forms. Catalyst, steady revenue growth but mixed guidance. Bear, 25% probability macro risk-off intensifies, or a major negative event, regulatory snag, major partner delay, or visible competition win, hits Nvidia's forward bookings. The stock retests lower support and multiples compress. Catalyst, macro shock, major deal pullback, or a large insider sell wave that spooks markets. These scenarios are not exhaustive, treat them as a disciplined mental model for sizing risk. Practical trade and investment playbook analysis form. If you want a step-by-step playbook, not advice, just analysis short-term trader, days, weeks favor confirmation. Wait for a clean breakout above $195, 200 on rising volume for momentum longs. If you fade, use the $175, 178 zone as an anchor for short-term mean reversion trades with tight stops. Nvidia is volatile enough that sizing and stops matter. Event-driven, earnings/partnerships avoid being long just ahead of major macro events or partnership updates unless you're prepared to hold through volatility. Use defined risk option spreads if you want exposure to a binary outcome, e.g., call spreads for upside, put spreads for protection. Long-term investor, multi-year consider staged accumulation on pullbacks to mid-$150s, $170s depending on your conviction and portfolio allocation. Size positions so a 30 to 40% drawdown would not force a sale. The AI structural thesis is intact, but execution and macro cycles will create noise. I don't think we are going to see perfect timing on every dip. That doesn't mean we can't build positions intelligently. For anyone thinking about all-in on the narrative, now is the time for disciplined sizing, not hero bets. Risk checklist, explicit risks you must monitor. Be brutal and explicit about what can hurt you. Concentrated exposure, Nvidia is highly correlated with the AI hardware cycle. If you already own other AI infrastructure names, your portfolio may be overexposed. Insider flows, repeated large sales by insiders or directors could sap confidence. Keep an eye on filing trends, not one-off moves. Macro shock, rate moves, recession signals, or a significant risk-off event will test even leaders. Crypto fear today is a reminder that risk-off can cascade. Execution hiccups, supply, yield, or integration problems at hyperscalers could delay revenue recognition. Competitive disruption or regulatory surprise either can change the calculus quickly. If any of these boxes tick, reevaluate position sizing. The market is unforgiving when multiple negatives stack. Let me be blunt, Nvidia trades on narrative as much as it trades on fundamentals. The chips, hardware, software ecosystem, CUDA/stack, and platform deals are real, but sentiment turns faster than fundamentals. A single negative headline can materially reprice expectations because so much of Nvidia's valuation rests on future growth potential. I want to be very clear, the narrative is flexible. It can turn bullish on partnership press releases and a break above $200 with volume, or it can weaken on a negative geopolitical, regulatory, or insider sell story. For traders and investors alike, controlling exposure to narrative risk is crucial. Quick checklist before you press the buy button. Here are 3 concrete checks to do right now. Do them fast. They matter. Volume check. Is today's move backed by higher than average volume? If not, treat the rally as tentative. Insider filings. Scan Form 4s for any continued selling. One big sale is a data point, a string of sales is a trend. Catalyst calendar. Are there near-term events, earnings, GTC-like talks, major partner announcements, that could move the tape? Plan around them. Do these. Then size your position. My honest synthesis, where I personally land. I'll be candid, I'm still constructive on Nvidia over the multi-year horizon because the AI compute story is real and Nvidia's ecosystem advantage is meaningful. But I'm not blindly aggressive at every market tick. From what I have been analyzing, the current setup is tentative bullish, trend background is favorable, momentum is tilting positive, but confirmation is missing without volume and clearer deal-level proof. I don't think we are going to see a crash out of nowhere, but I also don't think it's a zero risk by the second the price ticks up. That doesn't mean we can't see a breakout, it means we need to see a decisive, volumetric move to believe it. For anyone thinking about levering up or putting excessive portfolio weight into Nvidia now, please recheck sizing. For anyone thinking about a disciplined, staged build over the next 6 to 12 months aligned to cadence of partner announcements and earnings, that's a reasonable plan if you accept volatility. Note this as well. Even with Nvidia, there is something more you need. Fear not, I am the first and the last. Revelation 1 verse 17 is a call to trust in Jesus and fear not. If any man worship the beast and his image, and receive his mark in his forehead, or in his hand, the same shall drink of the wrath of God, which is poured out without mixture into the sea of his indignation, and he shall be tormented with fire and brimstone in the presence of the holy angels, and in the presence of the Lamb. Revelation 14 verses 9 to 10. Want more information about this? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more that I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly motivate me to continue bringing to you relevant information. Do not miss out on my future videos, all I am imploring you for is your subscription. Thanks for joining us today, your support means so a lot to us. Do share this video to inform someone who may benefit. Please do watch the next video, subscribe to the channel and share your insights about today's video. Wish you God's mercy and grace. Now is the time to prepare for eternity. See you in the next video by the mighty of Jesus our Lord and Savior.